Welcome to the Real Estate Show on KMED. It's Saturday, February the 18th of 2017. Pete Belcastro with you here today, and thanks for joining us on the Real Estate Show. I'm a real estate broker with John L. Scott in Southern Oregon. We get together with you once a week here on KMED. We'll talk about all sorts of real estate-related issues and topics. And, well, through 9 years and just a whole lot of shows, hundreds of them, we've never run out of topics. And today I don't think we're going to have a problem either, because we got two people in the house with us who are pretty much experts about appraising and things like that, which is such a big part of the real estate deal. And we're here to talk about that today, really to talk about how value is established for your property and things like that. Colin Mullane, who is a national director for the National Association of Realtors. That's a really fancy title for Colin. He's also a real estate broker with Full Circle and is a past president, right, of the MLS and ARVAR, right?
State Association, actually.
State Association.
Yeah.
You got more darn titles to call in than anybody I know.
Yeah.
You know that?
It's the fun part.
Good for you, because you know what that means is that's also guys and girls from the Rogue Valley in Southern Oregon in leadership positions in the Oregon, the state, and national level. You know, we all do that, whether it's coaching, whatever, real estate, you know, we got to have local people. And thank you for volunteering, because I know it's kind of a volunteer thing. And I know you're gone a lot and you do a lot of good work. So
thank you. I appreciate that, and I enjoy it. It's good stuff.
Good for you. And Danny Fry is also in the house with us. Danny's an appraiser in Southern Oregon. She's been appraising for 38 years, 20 of them right here in Southern Oregon. So, Danny, welcome to our show. Nice to have you with us today.
Thank you.
Yeah? So appraising, 38 years you've been appraising. You've seen a whole lot of changes, things going on, and I suppose in your line of work over those years.
Quite a few, actually, Pete.
Yeah.
Everything from technology to pricing and construction techniques, everything.
Yeah. Was it harder to appraise when you started? Or tell us what it was like when you started appraising over those years. What's changed about it, or has it changed, or just when you started there?
It's really the more you go, the more it stays the same. I'm still using the three approaches, except my report now, instead of 3 or 4 pages, is 35 or 40 pages often.
Yeah.
Technology has taken over and provided a lot of extraneous information. There are more rules. We're probably one of the most regulated industries there is in the country, both because of the federal level and the state level. But we're still doing basically the same things we've always done in terms of trying to evaluate the quality and condition and competitiveness of a particular property in comparison to its competition.
Absolutely. Now, today's show, by the way, is presented by the Rogue Valley Association of Realtors, and both of Danny and Colin are instructors within ARVAR. And you have been, I know this week you've been teaching, or you've been having classes, right, about appraising for realtors and things. Is that right?
Yeah, absolutely.
Yes. All right. Tell us just, what are the things that you talk about that, our listeners who are some of them are pretty savvy real estate people, what are the things that you do in a class of appraising? Colin, what do you start with?
Well, a lot of it is helping people understand how to identify the challenges that might occur through the appraisal process and how to plan for that and move your client through those challenges. So part of working with a real estate expert and bringing value to the table is it's not a very simple process. It's complex, and appraisal is one of those complex pieces. And a lot of challenges can come up for a seller and a buyer around the appraisal process. And so planning for that, setting realistic expectations, and making sure that the clients are fully informed of the various different aspects of the transaction, so that if we hit a roadblock or any kind of a challenge, people are just more prepared for it and better willing and able to move through that challenge.
Now, when does someone going to need the services of an appraiser today? When would I need to call Danny up? Oh, I can't call you up if I'm getting a loan, but when am I going to need those appraisal services?
Well, of course, anytime you're going to buy or sell a property, there's probably going to be an appraiser involved, unless there's a cash deal. If you want to refinance your home, a lot of people like RVs and boats and things like that, and they use their equity in their home for those kinds of things, or have a medical emergency or something. We also provide services for people in terms of estates and trust planning and a variety of reasons that they might need an appraisal.
I would think, you could, with a death in a family, you're going to appraise an estate.
right?
For the family to sell or these types of things, right?
Or for tax purposes.
Or tax purposes.
There are just a variety of things that people can rely on an appraisal for.
Now, what's the story with appraisers? Because Colin, you're an active agent, and a few months ago, I mean, we heard, and people were here at our show. They couldn't get an appraisal. It was taken. I think even in our office, we were told you better extend your closings another 15 days, and maybe now beyond 60 to 75 days, because we can't find appraisers. Appraisers aren't out there. Things like that. Is that okay? What's going on with that today? I mean, here we are in February. Is it still there?
Appraisers are still out there. They've been out there. They're very, very, very busy at the moment. Don't forget, I understand that you're trying to sell property and close deals.
Right.
But there are other people with other purposes that need our services as well. Refinancing and estates and trusts, the things that we already mentioned. And there are only so many of us to do the work. And so we're there when we're busy. Things are beginning to slow down a little bit in certain areas of the industry. It'll work itself out. One of the nice things about real estate is it's always changing and always evolving. So it'll work itself out.
See, I like Danny's approach to that, Colin. It's going to work itself out. It'll come out, and everything will be good, right?
Well, eventually.
Yeah, eventually it will come out, though. But there's still
I'm still working after 38 years. So.
And you're busy doing the things that you were telling us that you're doing. The problem, it seems like there's not enough of you. Is that accurate, Colin? Do you think that?
There are multiple challenges there, Pete, that go back to some federal regulations that are out there with regards to barriers to entry for the appraisal business. It's an expensive process. It's a lengthy process. I think for the consumer, the part to understand is that you and I, as realtors, we don't get to pick up the phone and say, "Hey, Danny, will you appraise our property?"
Right.
It is the lender that buyer is working with and their standards, and then that lender typically doesn't get to control the actual appraiser that goes to the property. If it goes to an appraisal management company, there's an extra layer there typically to protect the lender from anyone being able to come back later and say that they somehow massaged the value in a way that would be inappropriate. So all of those protection mechanisms have just made the process more complex. We definitely have, as I said, more barriers to entry to that particular business.
Yeah. Well, you said something about what is a
appraisal management company?
Yes, an appraisal management company. I've not heard that before. Tell me what that is.
AMC Appraisal Management Company is a fairly new development post Dodd-Frank Act that was designed in a way. Danny's looking; she might have better input for me than this, but it was designed in a way again to eliminate the doubt that might have been in some people's minds about whether or not that appraisal again was massaged in a way that would have been inappropriate, because they are supposed to be a neutral third-party assessor of value that protects the lender and the investors behind the lender on that loan.
That sounds really weird, though. I mean, I don't know. Danny, what do you think of that?
Well, appraisal management companies actually have been around for quite a while.
Okay.
On a much smaller scale. They originated as a service provider to relatively small lending institutions that couldn't afford their own appraisal departments years ago.
Okay, because the appraisal departments, like years ago, they were within the bank itself, right? They had their own appraisers.
But there were a lot of small community banks that simply could not afford to have a department of their own. And so they formed these things called management companies, and they provided a useful service in that regard. But over time, as the technology's changed and the rules and the laws have changed, management companies now play a major role in acquiring the services of an appraiser and overseeing the services and making sure that the reports that are done comply with the federal laws, the state laws, the individual lending institutions' requirements.
Would you have to be a part of that? I mean, would you have to join that kind of a group as an appraiser to
You don't
do
actually
that?
join it.
Or sign up with them?
They engage you typically on a panel of independent fee contractor basis. You apply to be on their panel if you want to work for them.
It's really weird, isn't it? I mean, just how an appraiser gets to the home to actually do the appraisal. I mean, you're going through these steps to get to you that are very, I don't want to say bizarre, but they're just.
You asked about the changes since I started. When I first started, I actually knew the lender and the lender's representatives and who the loan officer was, and could have conversations with those people. Now I have no idea who the loan officer is. I do usually know who the ultimate lender client is, but I'm dealing with people that are phone voices.
Right,
and,
right.
And as Colin is indicated, every time you call and try to ask a question or whatever, you talk to somebody different. It's extremely frustrating and time consuming, and it just complicates the process.
Yeah. Well, you really got to. It's a mess sometimes, and you get it. What is the story today? If I go to today, if I get a loan, someone's a seller today, and they get an offer, calling and it comes to them and say we got to do an appraisal. What's the steps today? How does someone get to someone like Danny today when we start this process? Tell people what you go through to get to it.
Well, again, it's going to be lender dependent, and it's going to be what
Are lenders different in how they approach this with their appraisers, or are they all pretty much the same? You know what I mean? Local guys
they're all different.
They're all different.
They're different.
Each
they can pick and choose the services that each management company they hire provides to them, and they can have more than one. There's one local lender I know that uses one management company primarily, but then when that management company is unable to fulfill the order in a time frame that they're looking for, they'll ship it over to a second management company. And the two of them will continue to try to almost competitively shop it, if you will.
And are all appraisers part of a management company now?
No.
So some appraisers
some appraisers choose not to work for any management company.
Okay. Will you get business?
Oh, sure.
From a lender, even though you're not part of their deal?
If they use exclusively management people, no.
Okay. All right.
But in the state of Oregon, we currently have 148 management companies registered with the Appraiser Licensure Board.
Wow.
And so appraisers, there may be some appraisers who are on all those panels. I don't know of any that are on all 148. So you're going to have different appraisers will be on different management company panels, and they will be representing different lenders, some of whom are local, some of whom are from Maine and wherever.
And what did you end up doing? Just out of curiosity, what you had to face this issue. What did you choose?
I choose to not do much with management companies.
I see. Okay, sure.
But then I not only have a residential practice, but I'm also a state certified general. So I have a lot of commercial activities as well.
Yeah, so you didn't have to do that, and
no,
you're
I
still
didn't.
able
I'm
to
fortunate.
do that. But a lot of appraisers obviously have become part of those things.
Right.
And Colin, do you think that we're talking, by the way, with Colin Mullane from he's a national director of the NAR and a broker here in the Rogue Valley at Full Circle in Ashland, and Danny Fry, who's a longtime local appraiser here. Are the appraisers you see coming in? What happens though? Why we get controversy with the results and things? Tell people how that works, because we get the results back, and a lot of times they don't come back the way the buyer or the seller want them to come back. All right, right?
Well, there's a variety of reasons behind that. I mean, appraisers are humans just like realtors. You could talk to several realtors on how they're going to approach working with you and selling your home, and you're going to get various different answers from them. So one of the things the appraisers are held to is a fairly uniform standard in how they approach the appraisal. I think where the challenge for the sellers and the buyers is if that doesn't work out exactly as hoped or expected, where typically if the appraisal comes in lower than the sale price because there are not values there to support it, then we certainly have some frustrated buyers and frustrated sellers. But ultimately, again, that is the neutral third party looking at it with eyes that are saying whether the asset, the home, is or is not worth it in the marketplace, regardless of whether or not the buyer was willing to pay the higher price or not.
What options are there for the buyer who's buying the house and the appraisal comes in, higher? We want it to come in low, I suppose. If it comes in high, what are your options for that type of thing? Because a lot of people find themselves in that situation.
There's a lot of options, and each and every scenario is going to be different. If the appraisal comes in low by $1,000, you might have a buyer that says, "I'm willing to pay the difference," and it's all up for negotiation as well. You can have the buyer say to the seller, "I want you to come down $1,000," and the seller might go, "No, I want to put it back out on the market and try it again," or they might say, "Yeah, or I'll split it with you," or like I said, said, if it's obviously the bigger the gap, the bigger the challenge. If it's a $30,000 gap, we've got a much bigger problem to fix than if it's a $1,000 gap.
And sellers need to be aware of this as they price their home a lot, because I always tell sellers and I talk to, look, you may want to put it at this price, but it has to appraise unless we get a cash offer, which isn't probably going to happen kind of thing. So you're going to have a loan. It's got to appraise, right? You got to be realistic of what that's going to be.
Absolutely. Being realistic on assessment of value is a key part to selling a home, or you're basically creating roadblocks to the transaction down the line where there's going to be challenges.
Well, in our next segment coming up, we're going to ask Danny how you reach value. What are the criteria that is used in reaching value? Because it's don't you think it's the most often asked question of a realtor by people is, well, I don't know the value of my home, or what's the value of my property, right? I mean, that's a big thing to try to know.
As soon as they see that realtor pin on your chest, the first question is, how much is my house worth?
How much is my house? How much is my house worth? And the answer is, well, I don't know. I got to come and see it. I want to know what I need to know more information about it. Well, so we're going to put Danny on the spot there. When we come back there about what's the criteria that we should use that people need to be aware of, and you try to price it, give me an idea of a ballpark kind of thing. All that ahead on the Real Estate Show today. We're with Colin Mullane, Danny Fry. We're coming right back to KMED. Hey, right after this. The Real Estate Show rolls on KMED. February 18th is our date. Pete Belcastro here with you today. Joe's out of town. He'll be back with us next week here on the show. Guy Giles will be along also. We're talking about mortgage interest rates next week here on the show. So stay tuned for all that kind of good stuff. Today, Colin Mullane, a real estate broker with Full Circle and a national director of the National Association of Realtors, is in the house with us. Colin's been here before on our show, and it's always good to have him here, along with Danny Fry, who's a longtime appraiser in the Rogue Valley. We're talking appraising today, appraisals, and all the kind of things that go with that in kind of a real estate transaction. We're getting a loan without an appraiser, it's not going to work. It doesn't work. You're not going to get the thing to go through. Well, before we took the break there, we wanted to ask Danny, what are the criteria? Because so many people, what the value of my property is, the criteria you use, and of course they may use whatever, everything that comes to their head. But you have to prove it when you do an appraiser, right?
I do.
Okay, what are the criteria when you go, say you come to my house or you come to Colin's house or what house? Tell me what you go through to find that.
I'm going to look at your house and I'm going to look at the obvious things, of course, like size and the size of the lot and the location and view, those kinds of things. I'm going to look at condition and the quality of construction that's obvious or not obvious, as the case may be. I'm going to look at things that I can go out into the market and look at similar properties and compare to your property, properties that have already sold, because that's going to give me an idea of what your property is worth, what a typical buyer will pay for a property like yours. One of the problems that we have is understanding that, everyone thinks that their home is the nicest home on the block.
Absolutely.
I mean, it's their castle, and everything that they have done to that home to make it their home is very valuable. Every nail, every light bulb, it's all important. And it is to them, and I understand that. But in the competitive market, it might not be. And sometimes some of the things that people do might actually detract from the value.
Hurt the value.
Because most buyers and sellers wouldn't choose that particular amenity or that particular...
Give me an example of something like that.
A hot tub in the master bedroom.
A hot tub in the master bedroom. That's okay. I never thought of that. Yes. Okay.
Or simple things like your paint, your interior decorating is such a garish color, perhaps that it's not going to go with anybody's furniture, and we know that when people go in there, they're envisioning their stuff,
because you have to appraise it by what you see, right? Not by what it can be. Right. Isn't that true? I mean,
normally
this property has great potential, right? I heard that all the time.
Yeah,
great
that's
potential,
fine.
but you're not appraising potential, right?
No, I'm looking at what's there.
Okay, you're looking at just what's there.
At what's there, okay. And I'm looking at it. It's not my favorite color. It might have been yours. I'm looking at what does the typical buyer think in the market? What are the current trends and the current desires? Is it underimproved? Is it overimproved sometimes? There are I see a lot of properties where people spend an awful lot of money on things, and it really doesn't translate into increased value.
A lot of kind of money on things like what?
Decks.
Oh, you could have said anything but that to me today, huh? No. Okay. Oh, you're right. Absolutely.
Well, yeah, or they'll have a home that is well maintained, but is fairly dated, and then they'll go out and do something that, if maybe put granite counters on their on their 40-year-old cupboards.
Right.
And
that's not
just
attractive.
Isn't really going to make that much difference in the value. It's kind of an over improvement, really. Now, if you want to, do some extensive remodeling or whatever, that may make sense. But just do that, it may not be the wisest choice for the money. But it's something you wanted and you did it, and that's fine because it's your home.
Right. Absolutely. Yeah.
Now,
how far back do you go in comparing properties? Now, I've heard all sorts of different things over the years. I hear that appraisers only go back 6 months. Is that true?
No, that's not true.
All right.
Lenders typically, of course, want everything to have closed within the last 90 days.
Yeah. Okay.
And that usually is not realistic. There are some exceptions to that.
So you will go back beyond that.
Lenders will generally accept up to a year without extensive commentary.
Okay.
I just did one not too long ago that was a very expensive custom home, and I needed to go back about 18 months simply to find homes of a similar size and true comparability. But I could explain that. So it kind of depends on what you're looking at.
What's the most difficult property to appraise, in your opinion, or a property type? I guess is the word.
In the residential market, it's probably the rural properties.
Rural properties?
Because they're so varied in the amenities that they have.
Colin's shaking his head too. Right?
Not just the houses, but there are so many outbuildings and things, variations, or you get into vineyards and you get into just all kinds of things that really complicate it.
How has recreational marijuana come into play with appraising? We've been talking about. It's so funny. You laugh at that as I look at Danny. Because we've talked about this affected everything in real estate. So tell me about appraising in this.
And a lot of it has to do with how your client, and my client typically is a lender. And they typically have some very serious reservations or concerns about those kinds of properties in terms of their federal regulations.
Right.
And so, my responsibility as an appraiser is to report things that I see on a property that are positive or negative or potentially either way. And so I will mention the recreational marijuana growing there.
And as you see where I think the Mail Tribune this week out at the old Willamette Egg Farm is being converted into a grow, and the place next to it, I believe they were saying, what are the values of these things going to be? It's going to be so fascinating over time, as you appraisers are going to have to, at some point.
And that's one of the challenges of appraising is you need data to back up whatever it is you're doing. And you have a situation like this where it is just now starting. Properties have not transferred.
Right.
A lot of them don't have a long enough income history, if you will, to really capitalize out and give you any kind of a number. And so it becomes very difficult to estimate a value for something like that.
And Danny, what's the easiest to appraise for an appraiser? The easiest type of property? A
3-bedroom, 2-bath, 1,400 square foot home in a subdivision of 200 homes.
You didn't hesitate at that a bit. I mean, I was thinking. I bet subdivision would be an easier task to do than older neighborhoods or even things, or even as they go along there.
But we want it to be a new one because once they start to age a little bit, people tend to customize them. And then it becomes more difficult.
Tell me about how you appraise additional dwelling units. I mean, one of the things that's happening around us is Airbnbs are becoming more important. a lot of rentals. People want additional dwelling units on properties to increase values, etc. Are you seeing that more around, or tell me how you would do that?
We're seeing it in certain areas, like Ashland is, of course, a very popular place in Jacksonville.
Okay.
Some of the other areas, we're not seeing that much of it. Again, it will depend a little bit on the client and how they perceive their loan to be, and it will depend a lot on zoning and what you're actually allowed to do with it. In some places, it is treated as a B&B, and that becomes a business. In other places, it may be a guest cottage for your family, and it would be treated differently for zoning, and therefore it would have a different approach to value. Because it's an auxiliary amenity instead of a business amenity or an income generating amenity.
So I just think that's the future.
Well, the important qualifier there is it's critical to understand whether that's considered permitted by the city that the particular piece is in. So if you've been bootlegging somehow successfully a short-term rental on your property, the appraiser's not allowed to count that.
Oh, they can't. You can't count that.
Well,
I see. Okay.
We may count it if it's for example a basement where you have an outside entrance.
You're gonna have to hold that thought there because we got a break coming up here. So hang on with that. We're with Danny Fry and Colin Mullane on the Real Estate Show. One more segment to go. We're talking about appraising and all that goes with it. We've got more to come. We're coming right back to KMED right after this. Real Estate Show rolls on KMED. February the 18th is our date. Next Saturday, we've got a show coming up on mortgage interest rates. Hope you'll join us for that. Guy Giles will be along. Hey, don't forget, this weekend is the home show out at the Jackson County Expo Park. Our old good friend Brad Bennington and the home builders of Jackson County putting that together. So head on out there. I'll got to be out there tomorrow, actually, for the Rogue Valley Association of Realtors has a booth out there. So Sunday, tomorrow, noon to 2, I get to go sit out there for a while, enjoy that. So it's always a big event, and I'm sure you'll enjoy it out at the Expo Park this weekend. Today here on the show, Danny Fry, who's a appraiser from the Rogue Valley, is with us. So this show presented by the Rogue Valley Association of Realtors, along with Colin Mullane, who's been on our show before, and a broker with Full Circle here in the Rogue Valley. Well, we're down. Danny, tell me how busy, right now in your world even though it's slowed down a little bit here in February, tell me what business is like.
Business is very good for appraisers right now. A lot of us are out several weeks or even into months now, depending on our practices.
How long does it take? Okay, how long does it take you to do this? How long does it take you to do a typical appraisal when you go out and get them done?
There is no typical appraisal.
There is none? Okay, all right. See?
But you can plan on probably 2 or 3 days minimum for a very simple, straightforward appraisal, because of the things that we need to do to verify the sales information, and we're calling people and waiting for callbacks and that sort of thing, as well as doing the inspections and the drive-by of the comp photos and all those kinds of things.
Because you have to go physically to the properties and take photographs, and even of the comps that you make.
Exactly,
also.
And depending on where the property is, and you can have quite a few miles racked up just trying to drive around, particularly if it's a rural property. So, that'll be more than a couple of days. That'll be several more days.
And you said this is the time of the year, well, it's winter, that appraisers are busy. And
we're busy all the
time, but extra busy. Tell people the reason. I love this.
Because we have a lot of refinancing. Comes up in the spring. Between I like to tell people it has to do with the credit cards from Christmas, and of course income taxes are due.
Yeah. But you see refinancing appraisals in the spring. You actually see a spike in that.
We see them a lot, but over the years I've seen a spike in them. In the spring. Yeah.
See, look at that, Colin. It is nothing.
It's all great information.
Everything's out there, nothing. The statistics, everything show exactly what's they don't lie.
No, the statistics don't lie. They're good. Yeah, I can imagine also getting a refinance loan in the spring to take care of some of those home projects that we do in the spring that Home Depot loves to advertise to us that it's time to get out there and build a deck.
Yeah,
and people will take out loans to make improvements so they can get ready and list their house.
Yep. Sure. Well,
so, there's a lot of reasons that people...
I've been on that 5-year project, to list it, my house, and I'm almost there, actually, but... That's taken a lot of work to get there, when you have a place that the hardest part to me is when you walk into a place that, that's high price kind of house and that's not updated. and you wonder, well, what's this going to appraise for? Because it's not what you think it is. And these are the challenges, I guess, that realtors face, appraisers face, and lenders face, isn't it? We're all in it together.
Yes, very much so.
Yeah. So what's the biggest challenge right now in the appraising world?
In the industry itself, I think is what we're going to do about the future and appraising. As we were talking this afternoon, about 30% of the appraisers are over 65.
Okay.
And about 70% are over 50.
Wow, 70%. That's a good number. Okay.
Nationwide now.
Nationwide.
And about 13% are under 40.
Okay.
So, you do the math, and if we don't start getting more people into the industry, into the profession, in a few more years, there will be some.
And what is the
problems.
roadblock to the profession? I mean, it seems like appraising is a good business. I'm just from listening to over the years. So what's the problem with that then? What's happening?
Probably the biggest issue at the moment are federal regulations that mandate the education and experience that appraisers have to have. At the moment, to become a certified general or certified residential appraiser, you have to have a college degree, a 4-year degree.
4-year college degree. Okay.
You have to have about 250 or 300 hours of additional education in appraisal only type of education.
Education, okay.
And then you have to serve between 2,000 and 3,000 hours of field experience under the supervision and tutelage of a certified appraiser.
That sounds like a doctor training. Seriously, doesn't? I mean, I've never heard of such a.
The experience and education requirements have just become astronomical.
Yeah, we've heard that. So that's why you got a shortage. You're going to have a shortage eventually, and some places probably do. With Klamath County, for example, I believe they had like a 4-month wait.
Yeah, at one point they did. We actually did have some of those appraisers in our class earlier this week, and they mentioned that right now they've kind of caught back up, but there's just so few of them out there that you're going to see that again this summer if the market comes back to the regular level.
We got the busiest months ahead of us right now.
And filling that gap with the current national requirements as they are is going to be extremely difficult to do. I mean, why does anyone want to go to college, get a 4-year degree, come out and take the equivalent of almost at least another half year of education, work for an extended period of time? Is that 2,000 to 3,000 hours has to be accumulated over at least 2 years, and it varies depending on which license classification you're going for. That's why I'm giving you a range.
That just seems overkill. I mean, appraising isn't rocket science either. It's you say it's a formula and the kind of thing. When was the last time you had it? Have you had an apprentice with you recently?
I haven't had an apprentice with me recently. I have had apprentices, or what we call them appraiser assistants. Right. I have had a number of them over the years, yes. And
are people still out there applying for that kind of thing? Are they eligible for those kind of things? They're just not there.
I'm getting more phone calls from people now than I was for people interested in becoming appraisers.
Okay.
I think part of it is the improved economy, of course. When the economy was bad, for some reason, nobody was interested. Gee, I wonder why.
Yeah, I don't know. Now we do, and now look what you're doing.
But the problem is that we have, another part of the problem, I should say, is that we have a lot of appraisers who, for one reason or another, don't want to be supervising appraisers.
Right.
And so, trying to deal with that reluctance on for a variety of reasons, and the extensive education. It's a difficult situation.
And it's a national issue. It can't be solved in Oregon. The legislature here. It's a national policy.
It's a national.
That's got to be changed. That's Colin Mullane's job when he gets to the national. He's a big muck in the National Association of Realtors. I'll bet you're on that, aren't you?
We're on it. You
Absolutely.
bet.
Well, look, we're out of time. Danny, nice to meet you. Good luck to you in your appraising. Colin Mullane, always nice to visit with you. We'll check in with you later as well. That'll do it for the Real Estate Show today on KMED 450. February the 18th. Have a great week, everybody. God bless you all, and we'll see you next Saturday right back here on AM 1440.
You've been listening to The Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshowOregon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making the Real Estate Show part of your weekend.